Good afternoon, everyone. It is Wednesday the 17th. Let's take a look at this market. Here we had some volatility, obviously. The S&P 500 lost $2.30, about 1.5%. So it gave back everything from yesterday that it gained, and those gains were slightly suspicious as it was under that 5-day moving average. So this type of action shouldn't be unexpected. That is a test of the rising 50-day moving average within a primary uptrend. If we take a look at some of these trend lines, basically we've kind of looked at something that looks like this that flows along with that 50-day moving average, and of course we've been focused on the more important level of support down at 153.5 to 154. I briefly had television on today. I'm not sure why, but my favorite guy who talks about volume all the time was saying that he didn't think the market was in an uptrend anymore. The market is in an uptrend. It's got a rising 50-day moving average, and we do not have a pattern of lower highs and lower lows. The direction of the 50-day moving average is still higher. It's getting a little volatile up here, but it certainly has no indication of making any type of top. It's interesting, though, that we did just come from all-time highs a couple days ago to this now talk of a downtrend. It just is really kind of crazy. You have to just take a step back and focus on price action. We've correctly been cautious because this market has been breaking down in here, and as I've been saying, and I will continue to say, that the news is more of a distraction than anything. We will have to focus on key levels. That's always our job, is to focus on the key levels and manage risk and take a look at what the market is telling us. What it's been telling us for the last few days consistently is that we have mixed messages here, and that we should interpret that as it's time to lower our expectations and go slower in here. With a big gap down like we saw today, and then the continuation lower, that we have to look at that and say, well, here we saw maybe you would have gotten involved for a bounce as a counter trend trade, but then as it broke back down below VWAP in the low of the day, the sellers certainly re-exerted their strength and kept that control throughout the day. So for tomorrow, we're not going to do anything different. We're not going to listen to rumors about terrorists all day long. We're going to focus on price action and say we have evidence, we have price evidence. We don't have, we can look at a MACD and say it's oversold and say, okay, well, that's an area of interest. We can look at the Fibonacci as we have and say, great, that's a level of interest. So is this support? But right now, the sellers are in control of the intermediate term trend, so we have to remain focused on disciplined, just kind of waiting for the bullish case to re-exert itself, or to pick short trades that make sense at the time based on a risk reward, and more likely for day trades when the primary trend is still higher. The Qs, again, this has just been a super choppy market all year. This is the trend line we've been focused on. Yes, it does go through these points. Someone asked me about that, but a trend line should be drawn to represent the essence of trend. And certainly, if you look at three parallel lines like this, this certainly represents the essence of trend. And we came down to the low end of that. We'll see if we get a test of 67.25 or so. But right now, we're at the rising 50-day moving average, and we're in this prior band that we were looking at as support, and that's where we'll continue to look for it. Perhaps we get down to 67.5 where this is, but right now we have to assume that we probably will, because the short-term trend is lower. We did close right at the volume weighted average price, but you look at what this market has done for the year. In fact, let's look at the volume weighted average price year to date. It's been choppy, but here's the volume weighted average price year to date of 67.70. For the S&P 500, we still have a little bit of room to go to touch that. It's down at 157.22. I'm sorry, 152.22. But again, we have to stay focused on these bigger pictures. The Russell 2000, we were cautious about it. We looked at it. It got up to or broke back down through that 5-day moving average and got destroyed yesterday. Didn't rally up much yesterday, and obviously we've continued lower in here. So now we have a lower high and a lower low, but we haven't. I don't consider it reversed until we close and hold below a 50-day moving average that is flat to declining, and we have this bigger level down here at about $89 a share. that we want to look at and say, is this going to be support? We can also take a look, as we have already, at some Fibonacci off of the lows from last year, and I didn't draw it exactly perfectly, but that comes in at about $87 a share. So, the market, you have to look at it and say, a declining 5-day moving average. You can get these bounces that just rip you out if you're short. But this is, again, why we don't look to short after a big down move. We wait for it to refresh and then break support. And if the market provides a decent opportunity, then to get short. Perhaps you got short in the Russell. I didn't today, but there was opportunity on the short side in there. Year to date, we are below the volume weighted average price for the year, and we found resistance actually there today. So that'll be interesting to continue to look at. But right now, we do have about 88.5 as our next important level that we want to monitor as an area of interest. The semiconductors, let's take a look at the volume weighted average price year to date. We're just below it. It is at 34.65. We're at 34.43, and we know that this level has been kind of critical this year as well, the 34 to 34.5. So I kind of view these semiconductors really kind of more neutral than anything right now. The weekly time frame still in a larger picture uptrend, but we're seeing near-term stagnation of that uptrend. The financials were down 35 cents today, again right on that 50-day moving average, and what's kind of represented the essence of trend in here as well. We had this midpoint of that trend line as well. But we broke out, and we looked at the possibility in all these markets last week is, will this be a case of from a failed move comes a fast move? And right now in the financials, that's what it looks like is happening. We broke down. We didn't get bullish. We were looking at this as a key level of resistance, 35 to 40 cents yesterday. We found resistance there. As impressive as the rally was yesterday, look at it today. And this is why, and I hope you guys are getting it, this is why we always stay focused on, let's wait for stronger evidence. We don't want to buy what's looking like a bounce within a down, an intermediate term downtrend with a flat to declining 5-day moving average. It simply does not make sense. You're better off in the sidelines in cash than you are to try to pick every single turn of this market. Not a lot of people can do it, can sit there and day trade. 1780 is the key level that we'll remain focused on in there for now. Year to date, our volume weighted average price right at 1775. So that's going to continue to be an important level. I was asked to take a look at gold and some of these commodities in the in this today, and I'm going to say the same thing I said in the direct messages. They're broken. They are just sad stories here. They are in a downtrend. We've been talking about guilty till proven innocent for months now, as we've pretty much throughout this year, as it's been below that declining 50-day moving average. We're certainly getting oversold. It's a deep sell-off, but there is zero evidence that this market is finding any sort of bottom. If we take a look at the 3-day volume weighted average price, the best you can say is we're neutralizing. Maybe we get a bounce above 135, but this is broken. The sellers are in control. Above 135, what? Maybe we get a move up to the 5-day moving average. It gets everyone excited for a day. They buy it, and then it closes up here, and then maybe it gaps down to 130. The way people got similarly excited about the rally in Russell 2000, thinking that was going to come back yesterday. It simply isn't worth it to try to pick the bottoms in these things, because they are quite elusive, and this is a multi-year top. There will be bounces over the coming 6-9 months, but I wouldn't be surprised if we saw it sub 100 in the next year or so. If we take a look also at silver, I was asked to take a look at. Broken, just horrible. If we get up to here, this is likely to become big resistance. Look at these previous declines in here. They don't, silver doesn't bounce very easily. If you're trying to catch the bottom, you're playing a very, very difficult game. There is zero evidence that the buyers are regaining any type of control whatsoever. Let's take a look at Apple real quick too. Apple finally broke that 400 level. It broke the lows at 419, and that was good to see. As I said, I'm not a hater on Apple. I do think, as Todd says, I kid around. Well, I kid around with Todd because I think their profit margins are too high, and perhaps this is the market telling them that their products. Anyway, I don't want to read into it. I want to just say that we are still in a primary downtrend. We have a declining 50-day moving average, just like we did when we had this rally here of 20% or so. We're going to have rallies in downtrends. It will happen in gold. It will happen in everything you see falling apart. But those rallies are guilty till proven innocent as long as we have a 50-day moving average. And if you're buying these and you get a bounce, that's great. If you're buying them and holding them and you think you found the bottom, you deserve to get losses because there is no evidence of even flattening out. As I said back here, the best case you could say is that we're starting to neutralize, but we're still guilty till proven innocent with a declining 50-day moving average, so the odds favor further downside. We're getting that. We're getting a whole nother group of people who are puking their positions out and saying what a good company it is and how it doesn't make sense. Listen to the message of the stock. That's where the truth is.